Debt management strategy. All right, y'all. If you want to have wealth, you're going to need to be able to manage any debt you have and eliminate any so-called bad debt, as that type of debt wastes money. If you have non-income producing debts such as credit cards or personal loans, you should pay those off as fast as possible if they have a high interest rate or a rate that is higher than what you can earn if you were to use that money to invest. Also, when dealing with large amounts of debt, remember, take bites of the apple instead of trying to eat the apple whole. To manage and eliminate your bad debt, you first need to list out all your debt you have by creditor, balance, interest rate, and monthly payment if one exists. In most cases, the order you pay off your debt is the highest interest rate to the lowest. When paying off your debt, you do not accumulate more debt during that time. Unfortunately, to pay off your past sins, you're going to have to make sacrifices or make a boatload more money. However, the sooner you eliminate your debt, the more money you will have to invest and create wealth. You then need to come up with a payoff plan so you can understand how much you can pay down, when you can pay it down, and how long it will take you. In order to determine these, you will need to use your cash flow analysis and budget. These two tools will tell you what you can do and how long it will take. Let's take a real-world example. Dave is 29 and is currently living paycheck to paycheck, making $40,000 a year, and has no idea where his money went and is going. In addition, the only money Dave has is $200 in his checking account. Folks, this is not a way to live. On top of all this, Dave was a little irresponsible the past few years and racked up the following debts: a Capital One balance of $380 with a 30% interest rate, a Chase Sapphire balance of $4,797 with a 26% interest rate, a USAA balance of $1,390 with an 18% interest rate, a past due federal income taxes balance from 2021 of $3,382 at 4% with a minimum payment of $48 a month, past due state income taxes from 2021 of $493 that need to be paid over the next 7 months, a private student loan debt of $8,312 with a 6% interest rate with a $91 a month payment, a federal student loan debt of $29,842 with a 6.5% interest rate with no monthly payments of $250 until January 2023, a car loan of $12,881 with a 9.1% interest rate and a monthly payment of $288, and a current year estimated tax liability to be due of $2,000 from underpaying this year's taxes. So, we have multiple issues to address here. First, I like for all my clients to have at least $500 at all times in their bank accounts for an emergency. Second, he has some expensive debt. Now, I told Dave he's not going to have much of a life over the next 6 to 12 months, and he said that sucks. And I said, no. What sucks is for you to continue to be stressed out about your money and have none. So Dave agreed to the following plan because he would rather have money and no stress than continue to have stress and no money, but live a little bit of life. So here's the game plan that we came up with. First, he put together his budget and cash flow for September through the end of the year and for all of 2023 so he could see how much he could save, how much more expenses he could cut back, and then how much cash he would have every 2 weeks so he could then begin to formulate a plan to start paying off this debt. Second, we decided that we could just pay the monthly payments on the past due state income taxes, as those would be paid off by April of 2023, and then monthly payments for the past due federal taxes, 2 student loans, and the car payment, as those were at lower interest rates and manageable monthly payments. Then we said the first debt to pay off after saving $500 was the Capital One $380, as that carried an interest rate of 30%. He saved $500 and paid the Capital One balance off at the end of September. Then the plan is to pay off the Chase Sapphire balance of $4,797. Between September and December 31st, the cash flow analysis showed he is able to pay down $2,400 of that debt. Then starting on January 1st, 2023, we had the following non-monthly payment debt still to address. You got 2022's tax liability of $2,000, the remaining $2,397 of the Chase balance, and then you have the USAA balance of the $1,390. Since he has until April 17th to pay his taxes, Dave will then shift his focus to save the $2,000 in January and February to pay his taxes in April. Then in March, he will be able to save and put down another $1,000 towards the remaining Chase Sapphire debt, and by the middle of May, his cash flow shows he will have the ability to pay off the remaining Chase debt. With one credit card left and a balance of $1,390, Dave's cash flow shows he will have enough money by the end of June to pay off this debt. With all that said, by the end of June 2023, Dave will have a $500 emergency fund, paid off his Capital One, his Chase, and his USAA debt, plus the state taxes, and lastly, the 2022 tax liability of $2,000. This leaves the remaining debt of the past due federal income taxes from 2021 of $3,382, the private student loan debt of $83,112, the federal student loan debt of $29,842, and the car loan of $12,881. While not ideal, those monthly payments are manageable. Dave has also said he wants to start saving for retirement and contribute to a Roth. Therefore, once July 1st of 2023 rolls around, we will revisit what his free cash flow looks like from 7/1 to 12/31, so that we can then begin to game plan to work on his next plan of saving for retirement and a 6-month rainy day fund using a Roth IRA on top of eliminating that car loan that has a 9.1% interest rate and being able to start living life again. The reason that he will not pay off his other debts right away is because he should be able to generate a higher rate of return on his investments than the interest rates on those remaining debt, which is how you create wealth. Understand, managing debt is a math equation, and it will take discipline and sacrifice. As shown above, it's much easier when you take bites of the apple by laying out all the debt in front of you and using the tools provided so you can formulate a realistic plan.